is going to fall. It has to. And inflation, or at least the way it's measured by the CPI, is going to rise, right? I mean, we're right now at around 2%, which supposedly is the ceiling, but that's now the floor. But inflation is going to pick up. And as the dollar starts to fall, of course, that's going to put even more upward pressure on prices, commodity prices, a lot of the things that we import. And this is going to be like a snowball kind of rolling down a hill. And as it rolls down, it gets bigger and bigger and bigger, and it gathers momentum, and it becomes much more destructive as it becomes, this huge ball that starts crushing everything in its path. That's where we're headed. Because once everybody knows that the Fed has no ability to control inflation, has no ability to raise interest rates or shrink its balance sheet, that's the end of it. Right? Because people were willing to hold the dollar so long as they believed that the Fed had the ability to defend its purchasing power. Well, not only does it no longer have the ability to do that, it doesn't even have the desire to do that. It doesn't even pretend that it wants to do that. The central banks, not just the Fed, but the Fed is saying, we want inflation. 2% a year is a minimum. We want more. So they're telling you that you're guaranteed to lose if you are going to hold dollars. So once this thing gets started, it's going to implode. And this means a lot, because once the U.S. loses control of the dollar, they've lost control of everything. Because the ability to artificially suppress interest rates the key to that is the dollar. The world has to want the dollar because they have to create dollars to buy treasuries. That's how they suppress interest rates. That's how they enable larger deficits. That's how they enable corporations to keep on going deeper into debt to stay afloat, even though they don't have any profits. Look at all these U.S. businesses that don't generate profits. How do they stay in business? Because they can keep on borrowing money, or they can keep on tapping into the equity markets for capital. But why is capital so cheap for money-losing companies? Because the Fed is artificially suppressing interest rates. It's almost ironic that by creating inflation and printing money, they're actually helping to keep consumer prices down because they enable companies to keep selling products at a loss because they can tap into these markets. But they can't do this indefinitely because once the markets lose confidence in the dollar, well, then the Fed just can't keep monetizing the debt anymore because they're creating money that nobody wants. They can prop up the bond market only so long as the dollar doesn't tank. But once the dollar starts falling, then the party is over. And that is where we're headed, right? And the opportunities, obviously, to make money here are pretty obvious, right? Gold is going to go through the roof in a dollar crisis. Because once the dollar starts to fall and it's down for the count, the dollar is going to lose its status as the reserve currency of the world. And that has profound implications, not only for the United States, but for the rest of the world. Now, for the United States, the implications in the short run are very bad. For the rest of the world, it's actually good. It may be a little disruptive, but it's actually a good thing because America has benefited from this status to the detriment of everybody else, because we've been able to live beyond our means, and that means the world has made that possible by subsidizing excess U.S. consumption and excess U.S. borrowing. So this whole thing is going to come to an end as the dollar starts to fall. And of course, as I mentioned earlier, it's happening at a very bad time politically. Everything's going to get blamed on capitalism, on free markets, on tax cuts, on deregulation. And as this whole thing unravels, Americans are going to look to government and socialism and more central banking, more money printing as the solutions to the problems that we're going to be finally experiencing the consequences of.